Hey guys, Mike here. So, oh boy, what a super red day today. I mean, this was one of the reddest on the Qs I can remember in quite a while, was it not? I mean, the bears just went whaba to the bull and said, "We are still in charge, sir." And the bears, or bulls, excuse me, were like, guess you are, because it was one of those days where there was no retracement. Once it started selling, it was just gone, right? And we got a lot to discuss in this video, but there's, the main thing that's happening here, understand, is the bond market, who is the big brother to the stock market, is in charge, and it's letting it know it is in charge, okay? And what I mean by that, again, I'll say it till I'm blue in the face, you cannot have a real move up unless some crazy move up in the stock market with yields doing this, right? 10-year spikes again overnight, keeps going throughout the day. Look at the 30-year. It says, you think you're going to outdo me? I'm going to outdo you, right? Up over 3% for the day. And so, again, as I told members, the only reason that the yields even came back was because Bill Ackman put that tweet out about covering that big bond short, right? And so until this stops, right, you're just not going to have any consistency as far as the moves. And look, this right here on the 30-year, for example, like this is normal. This is before the Fed actually even took over the market. But, you can see it's like in a range, right? This is now. This is, we're going into year, what is that, 2021, 2, 3, 4. So this is, at 2024, we'll start year 5 of this, right? And so, that's not normal. Even when the Fed was in charge, like took over the market, this was a range. You were just kind of in this range, right? And it kind of stayed that way. That's normal in a way, right? It looks just like 04 to 08 or whatever. And so, when we pull up the 10-year, you see pretty much the same thing, but that's not good, okay? But, let's pull up the 10-year, and this is obviously the most bought bond in the world right here. And you can see, same thing happening right there. This is when the Fed actually took over the stock market and bond market because they were the biggest buyer of bonds. And that right there. So that's kind of more normalized. What we're seeing now, again, that is not normal. Okay, something we've really never seen before, to be honest with you. On top of that was affecting it is this right here. The Bank of Japan to watch yields till last minute to decide if they want to tweak the yield curve control that they've been doing. All right, that came out yesterday, and then it was floating over the news today as well. And that will affect the markets because if they decide to not control it as much and let it run a little higher, they're going to be selling treasuries, which is going to put more supply in the market, which is going to drive yields up even further, okay? Then you got this one. This shouldn't be no surprise, right? Right now, treasury ETF volatility is exceeding the S&P 500 ETF by the most ever. Is anybody surprised by that? To the upside, that is, right? To the downside, you're not surprised at all. But to the upside, never happened. Again, it's like people are just standing by. And like Elmo here, I think this is, says, hey, chaos, the market seems to be just burning down, right? That's what it feels like in a way. And you would think we were down way farther than we are, to be honest with you. But on the other side of the pond, I mean, what do you got going on? China, their central bank is actually injecting, right? They're doing QE, not QT. So you can see this is 2023 right here. And they're doing more injection than they have in a long time. And so they're trying to pump theirs up. And the reason why they're doing this, because obviously you see right here, China developer Country Garden deemed in default on dollar bond for the first time. Even after all this horrific mess has happened over there, they finally officially default on the bond. And more of this is going to happen, right? I mean, these are the biggest developers. They're in deep trouble. Unless the banks literally just give them money, I don't see how they don't continue to default. And so that's why you see the president of China going to their central bank for the first time since he's ever been in office. It's been a decade. He's never been there, and now he's like, hey, we got to do something because he is desperate to figure something out here. Again, I don't know, when your real estate market makes up 70% of your wealth and it's just in a mess, how do you fix that? What is the central bank going to do? I don't know, right? And so that's what we got to figure out. Now, I have to do this just because this is what kind of day it was. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. And of course, that always makes me laugh as I'm watching that. So yes, that's what it was, right? It was just, you thought you were going to get a pop back up, a V-shaped recovery, because we've been getting them all the time, and did not happen. Now we got to figure out, again, I showed you a chart a couple different times now. We had these weekly fair value gaps on both sides, up and down, and which one were we going to be heading towards. I think we did that back in probably September. But you can see you got two different scenarios playing out here if this is the way it works. Even after the crazy sell-off today, you are still in this falling wedge on the Nasdaq 100. Still there, just at the bottom of it, right? Left another gap to be filled, setting almost at the 50 retracement from this last move up right here. And you're sitting there with a 200-day moving average, though, beneath a weekly fair value gap, right? Also with a golden pocket. If we go to the Nasdaq composite, though, it's a different story. So that's about 3% down to your 200 moving average. But look at the Nasdaq composite, which holds a lot of stocks that are actually down for the year. Well, its 200 moving average and 50 retracement, all that actually meeting up right there, along with the fair value gap right there. And so it's like 0.47, I believe, away from its 200 moving average. So the question is, which 200 average actually moves out or wins out, right? I mean, that's the big question. So that would be a perfect bounce. Again, we can keep moving down, that's for sure, if the NASDAQ 100 is going to be what's king here, because the Magnificent Seven is what's held the stock market up. Right now, as far as sectors, believe it or not, there were some sectors that were green, but communications, rarely you see one sector down almost 5%. But remember, this was the one that was leading in 2023. I showed you what was in it, and a lot of it was the Magnificent Seven that was holding it up, that made it actually beat XLK. But you can see, I was actually surprised XLK wasn't second on this list. I was surprised these other ones were above XLK for the day. It felt like with the Magnificent Seven, a lot of them getting just beat down, that this will be down way farther. But if you scroll down, I mean, there actually was two green sectors today. One of them was actual staples, which kind of surprised me a little bit. And then energy was flat, which, I mean, a lot of their stocks were actually green today. Financials weren't too bad off. That's why the Qs were so much weaker than the SPY was, if you notice that. And then when you go to, the sector that was really killing us today, it was semiconductors, right? I showed you this trend line the other day, and I think it was over maybe the weekend or whatever. And you can see, that's broken down. You remember this V-shaped recovery and the SMH, that's the Van X Semiconductor ETF. Again, all it's doing, though, even with the selling off, it's following this downward channel, right? Just like clockwork, heading down here. And then, of course, one thing we're going to add in here is this gap that was set a while back. So that right there is going up right below, or actually start intersecting that channel right there. And so we got that gap to fill, which is a pretty decent drop there, which means if it happens, obviously that's going to be NVIDIA, Taiwan Semiconductors, AMD leading the way down. But we add in a 200 moving average, get a little more confluence going on right there, right? So we got bottom of the channel, 200 moving average, top of that gap. We know gaps can act as support for a bounce, so let's pay attention to that one. And you can see AMD, huge breakdown today, right? And we talked about that smaller wedge was a false breakout, and that's exactly what it was. But you come down, it broke the 200, it broke that anchored VWAP from the low of 2023 right there. There's that fake out. Comes down, so I like to keep this trend line in place. Tries to hold on, nope, retest, and then it's just nothing but a waterfall. Boom. All the way down like that. So it's almost down 6% for the day, which is a hot mess. But when you pull out, and one of the members saying, hey man, when's AMD going to bounce? I was like, well, it better bounce now, because you can see with the volume profile, that level right there is where it finally found some support, and it needed to, because it falls through right there on 95. It's going to go through the next volume gap and take it down to around 90. And so, yeah, that one needs to start moving up. Now, of course, the stocks that we thought was going to bring us up was going to be Microsoft, because they had a huge earnings. It actually didn't raise guidance, but it kept it the same. But it beat top and bottom line. It was at 40% starting out. But as soon as it started to sell off in the morning, that's when I was like, uh-oh, this is not good. Because it's supposed to be strong, right? And it was entering a gap. Nope, it just started coming down, filling the RTH gap right there. And then we have Google, which has been in this rising wedge forever and a day, and finally broke down off of it. I talked about these tree branches on the side over here on the volume profile that should slow it down as it starts to drop. But of course, what I didn't know was it was going to gap down, completely miss the tree branches, almost 10% down that is. So now those will become resistance, falls into a gap from the last earnings it had, would most likely will come down, keep filling that. So around 124, you see very good support right there. And what the CEOs of Microsoft And Google tried to do was say AI a million times.
AI, AI, and AI, 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 AI.
And of course, they end up saying it 145 times. It worked a little bit for Microsoft, did not work for Alphabet at all. So is the AI bubble over? We'll have to see. Now we'll take away the rising wedge right there, so we don't need that anymore. And you can see right there around that 124 mark right there is good support. We'll go ahead and put this gap on in right here. So that'd be a nice big gap to fill, about a 10% gap. And again, those tree branches should be resistance now if it tries to move back up. But we need to see if it can hold the 124. And you can see that actually is good support for it. I mean, that's pretty much what we're looking at. So we might have a little more room to the downside. Now, Tesla, didn't matter what the market was doing to begin with because Tesla started ripping. I thought it was going to be one of those days, man. It went up 4.4%, rocking out of the gates. And I thought that because here comes the call volume. The sweeps flowing in, right? Just millions of dollars worth flowing in. Well, what we didn't know was we were going to have this crazy sell-off day, and so it don't matter how strong something is. It was only down 1.5% for the day, which it filled this gap, so I'm going to take that out. But, you know, looking at it, it seems like it likes the 220 for the top, 210 for the bottom, so somewhere in that 210, 220 range, if it can hold that. We only broke it once, and that's when it went to 202 and got bought up with a quickness. So let's see if this continues to base out or show some kind of strength here compared to the market. Now, Apple bounced off that 200 just the other day, sitting on the 200 again. Again, we got earnings next week. You can see, though, still in this falling wedge pattern. You know, so no different. Still just playing this out right here. That usually is a bullish pattern. So, you know, we'll have to see. I can't imagine they're going to report good earnings, but I mean, who knows? Maybe you guys are out there buying the new iPhones and those goggles or whatever they call them and stuff. I mean, my wife loves that stuff, but I mean, and they raised prices today. So if you're buying it, you know, if you got it beforehand, you know, congratulations to you, I guess. But again, support 165, it breaks down below that 200, which also conforms right to the bottom of that falling wedge right there. So we'll have to see how this plays out again. With earnings, that's what we're going to find out. Google's doing great, and then bam, it ended up crapping the bed. So we'll see what Apple does. If Apple does go down to 165, we know we got a lot farther to fall in the market, but we still got like almost a whole week till they report. Now, you guys asked me about this one and the next one, so I'll go ahead and put this out there to you. It's like I told members, man, PayPal is a hot mess. It's a falling knife. It fell out of this falling wedge, which has been in forever, over a year. Every day seems like a new 52-week low. And like I said, when I tell you about the momentum, there is no love for this stock whatsoever, at least from the big buyers. Okay, and when you're looking at this thing, going to the weekly, we talked about this a while back, where I mean, look, that's a massive crash. And when you're looking at this thing, I mean, the 40s are definitely in play at this point in time because it's starting to go through levels that are way back from 2017. And you can kind of see where your real support there is. Now, when you look over at Square, because people ask about this one, its big problem is it lost its connection with BTC, right? Its chart's identical to BTC because they own a bunch of it. And then 2023 hit, BTC took off, and Square said, no, thank you. It went the opposite direction, and it continues to go down and down and down. Remember, just because stocks are cheap, they may be cheap for a reason. Don't mean you got to buy them, but again, I think until it gets a connection with that, you know, you'll see these little mini rallies or whatever, but it's just, oof. Those 2020 lows, I mean, has it reached it yet? Not quite. So $33, $34, I think that's the low. Watch out for that. Now, when you look at this right here, earnings tomorrow, again, we're going to have Royal Caribbean, UPS. Maybe that turns around transportation because they are just a falling knife too. Hershey's, I buy chocolate. They keep raising prices, but I keep buying it. Southwest, more travel here. As you can see, Valero, Merck. Then we'll have one of the other Magnificent Seven, right? Enphase, which has been getting killed with all the other solar stocks. Intel, Ford, Chipotle usually does well. We'll have to see. I want to see they're raising prices again. Capital One is going to be all about, you know, them talking about how much they're putting back for credit card defaults, things like that. We will have a lot of economic news in the morning, which could shift the markets. Continuous jobless claims, PCE, durable goods. Oh boy, GDP. Look at that right there. They're expecting a 4.2. And if that comes in hot, I think yields might end up spiking again. So just keep that in mind. But it seems like it's a hot economy. Then you can have initial jobless claims, retail consumer spending, inventories, some Fed speakers coming out here, pending home sales. Man, this is just loaded. Kansas Fed Composite and Manufacturing, some bond auctions, especially that 7-year note right there. We'll pay attention to that one. And so as you can see, guess what? It's going to be another volatile day. Yeah, I mean, that is a lot of economic data. And like we talked about before, I mentioned in this last week, this week, in the beginning of this video, if the Magnificent Seven crap the bed, even just half of them, right? 3, maybe 4 of the 7. You're going to bring down, especially the Qs, because it's 45% of the Qs. I mean, there's just no other way around it. And so, that's where we're at. Where is the bottom going to be? We'll have to see, right? That's what, like I said, yesterday it's a process. That's what it is. You're seeing indicators flashing like, oof, this is super bad, right? Meaning lows, the fear and greed index, like all this stuff. But since I have to put it out every morning, I just don't get panicked about it because I see it. I have to put it together for the members every single morning, right? But I will say, earnings for the other companies actually coming in better than expected. It's just the Magnificent Seven have had such a huge run up, so the expectation is way up here, right? Remember when they were way down here because the stocks were way down here, and so all they do is fall over the bar? Well, now it's a little different. Like Google, you would have thought they had the worst earnings ever. Really, it was their cloud, right? Missed it, and then they hit a top and bottom line, or bottom line beat or whatever, but it didn't matter. 10%. See you later because they had just that crazy run up. That's what happens. So, we'll see how it goes tomorrow with Amazon. Again, they've been selling off like crazy, man. So they hit that double top. So they're definitely selling that one down for earnings. So maybe that one will get a pop because of that. So we'll have to see. Again, Meta's reporting today. I don't know what they're going to end up doing, but they're way up there too. So we'll see. So anyway, please hit the like and subscribe button if you got anything out of it. Let me know how your day went and everything. Let me know if you did any shopping or you got any stocks on your list and where you think the bottom is at. Always glad to hear from you guys. So anyway, hope you have a great night, and I will see you tomorrow.